Global markets are in free fall as we get the response from China in regards to Trump's tariffs. The response this morning was that China hits back at Trump with tariffs, limits on key exports, and actually did a 34%, basically matching the same tariff on American imported goods. And Trump responded to this saying China played it wrong. They panicked. The one thing they cannot afford to do. And I could tell you what NFP reports said this morning, but Trump already did that for us. Great jobs number, far better than expected. It's already working. Hang tough. We can't lose. And we'll take a closer look at the jobs numbers in just a second, but let's first take a look at the market's reaction to all of this recent development. You can see pretty much across the board, we've had pretty sharp selling. S&P 500 down, NASDAQ down, gold down but bouncing, and then Bitcoin, same thing. We're seeing a little bit of a bounce back, by the way, with some of the latest developments. But you can see pretty clearly in all of this that the fear around a global recession elevated today, and that is why a ginormous red candle is taking place at the time of recording this. We're down 3.2% for the S&P 500, the NASDAQ's down 3.4%, Dow Jones down 2.6%, the Russell is down 4%. Markets are getting crushed recently. And take a look at the VIX, up to 38. At one point, it was up to 45 here. And here's a look at the NFP report this morning. It did come in better than expected. In fact, if we hover over this, we can see the actual data was 228,000 jobs compared to the forecasted 137,000 jobs added for the month of March. So while this was a glimpse of hope and a little bit of a light at the end of the tunnel that the jobs market's holding up okay, it's now more concerning that, again, all these other countries, how they respond is very important to this story. And China responding pretty aggressively in retaliation was not something necessarily super unforeseen. China is, after all, a big rival of the United States, but this does continue to escalate the story, and many investors might have been hoping for some negotiations from President Xi and China in response to this, but instead they're digging their heels in, so is the US, and it does seem like we've got a trade war ahead of us. And trade wars cause concerns about recession, which is exactly what oil prices are telling you today. Oil prices down 7% at the time of recording this video for US oil. When oil prices drop like this, you might say, well, that's great. Gas pump's going to be really cheap. And that may be true, but at the cost of possibly some spike in unemployment data. Now, we didn't get too much proof of that today. We just went through the NFP report, which is a good sign. The market's looking forward, saying, well, now it seems like trade war is truly getting started. That could seriously impact profits from companies that do a lot of trade globally, and that could lead ultimately to a lot of people losing jobs. Copper's also down 6.7% here today, and silver getting hit again, down 6.3%. You can see key levels of support barely even trying to hold for silver on the way down here. The theory, I think, is that when it's something like an industrial metal like silver or copper, the demand for these things seriously dries up. Same thing with oil if there is in fact a global recession. Another thing now showing some serious signs of a potential recession starting to take place is the 10-year yield. Yields are falling dramatically, and now the bond market is expecting a rate cut very soon. You can actually see that we are unexpected. Now, as of the latest data, you can actually see we are almost at a 50-50 chance that in the upcoming May meeting, the Fed will cut rates. And when we take a look out to the end of this year, you can see the last meeting being December 10th, 2025. The expected rate cuts that are coming in are pretty substantial now. 1, 2, 3, 4, potentially even 5 rate cuts coming in. That's crazy. And so with all of this uncertainty, I'm going to talk just quickly about a trade that I took this morning, which is a long position on gold. When I pull up the US economic heat map, we do see a good number of negative catalysts for the US dollar here, getting a 46.67% score, which is kind of not great. And on the top setups page, we still see gold getting a +8 bullish reading. Seasonality is a positive catalyst for gold. People seem to be betting against gold as it continues to rise. The trend is to the upside, and a lot of our economic data, especially PMI data this week, came in soft. Unemployment rate also ticked up today, and interest rates falling is potentially a bullish catalyst for gold. On a price action perspective, we're pulling back to the 38.2% retracement, and I have a support level here and a support level here. If price fails to hold this area and continues to plummet, I'm going to stop out and take a loss on this idea, and I do have plans to potentially try a second time if we go down to the 61.8% retracement. This is an initial position for me. It's not a huge trade. I have a controlled loss, and I like this idea a lot more than trying to chase the NASDAQ or buy the NASDAQ or even short the NASDAQ into this kind of crash. Like I'd actually rather focus on something that has relative strength like gold, which I think actually could continue to benefit from all this uncertainty. And it's been an idea of mine all year long, has been bullish on gold. I traded it from here up until this point, and now I'm getting back into the trade here at the 38.2% retracement. And I've alerted this trade to members within our Discord server. If you'd like to trade alongside with us and see every trade I'm taking, it's available in the description down below. Sign up to get access to every trade that I'm taking in this crazy time. We've got a whole lot of trades going out and a lot of stuff taking place, and there's some great opportunity in all of this chaos. So stop trading by yourself. If you're out there just wondering and running in circles, not sure what you're doing, and you want to start taking your trading seriously, consider joining our Discord group. The link and promo code to join is in the description below. Also, a quick reminder, the Edge Finders 40% off sale is coming to a close soon, so don't miss the opportunity to get our biggest discount of the year. If you'd like more information, you can chat with us using the first link in the description down below. There's also a promo code and link to get access to our tools on the website, a1trading.com, or in the description below. And would you look at that? Just when you think market volatility and uncertainty can't get higher, the put to call ratio completely put my theory to shame. We really ripped higher here on the put to call ratio, and I'm feeling very grateful that I was wrong about that idea that volatility may be peaking out, because I stopped out of some of my NASDAQ ideas, and it's been one of the best trading decisions all year long was to stop out when I was supposed to stop out of an idea that I had. This just goes to show at the end of the day, there's no room for arrogance when it comes to trying to trade profitably. I had an idea that I thought that the NASDAQ might bounce, and I was just wrong. And one of the most important things as a trader is to admit when you're wrong, because if you don't admit when you're wrong, the market will admit it for you by causing you to lose a ton of money. So I stopped out of some of my ideas. I've pivoted towards focusing more on currencies and gold, and that's been working out a lot better for me. With this put to call ratio getting this high, however, I do have to step in and buy some more stocks that I like. So that's something that I will be planning on doing today, looking at companies that I like that I think are on sale for the long term. But I think if you're going to be out there trading anything in the stocks or indices world, long-term focus is really important right now, in my personal opinion. I don't think that there's a solid ground to stand on to say, oh, I think we're going to have a sharp bounce right here, right now, because again, we're waiting for some clarity from the administration and global kind of situation before we get further confirmation that perhaps a bottom is in. So if you're talking about the NASDAQ price action wise, again, we are in a straight up downward trend. Now we did hit on a longer term basis a really key level of support, but we've hit a lot of support levels, and a lot of them have continuously failed to hold. We're back down to the August lows, which is pretty incredible if you think about it. We had that big capitulation sell, which did in fact end up being a bottoming signal. But again, so these were too early bottoming signals, right? So it's very easy to, in hindsight, say, oh, well, this is clearly the bottom, right? So when we look at this, is this the bottom? Maybe, but I think what you probably want to look for, in my personal opinion, would be signs of higher lows on like the 4-hour chart. Give me some signals that we are actually truly bottoming out before I jump into some new ideas on the long side. I'll keep an eye on the indices, but again, just because we hit a long-term level support does not mean that these ground-changing trade dynamics couldn't send us lower in the coming weeks or even months. So for me personally, I'm going to wait for price action to give me a sign of bottoming out, and I'm going to look for opportunities to take advantage of higher lows. I don't care to be the first one to buy. I care to be on the right side of a new momentum building train, not necessarily trying to catch the bottom, if you will. This is a falling knife at this moment. And while I do think long term, there may be some great opportunities to buy stocks, which is something I'm personally doing, I think in the short run for traders out there, it's going to be very difficult to try and time the bottom. That being said, another thing that's attractive to me right now is selling premium on options. I'll probably be selling some puts and maybe even some covered calls if we do get a bounce on stuff. That's personally something I'll be taking advantage of with this high level of fear. The dollar index is trying to bounce here, and there's a little bit of a phenomenon here where if we are going into a global recession, if that is something that happens, right? And it's not a certainty because, again, it's one phone call away between Trump and another key leader or something to really kind of offset that direction. That's why the markets are so volatile. But if you get some, continuations of this uncertainty, trade war escalations, and et cetera, the dollar index might actually start to look relatively attractive as, again, if the global situation worsens, meaning all countries kind of enter into, or many countries enter into a recession, right? The dollar could actually fare a little bit better than others in some ways. So there's some relative outperformance. That's typically what happens in a recession, as the dollar becomes attractive because it's the global reserve. People still are very much willing to buy the dollar over other currencies if we're going to go into this prolonged trade war, where many people would argue that the US, although at the centerpiece of all this, could potentially survive some of the ramifications better. But the sell-off has become contagious. You can see the DAX down 4%, the Nikkei down 2.5%. You're seeing global stock markets really take a hit now, joining in on some of the selling pressure that we see. Here's an ETF tracking Chinese stocks. You can see down 6%, FXI. So I have a long position on the euro dollar that I continue to hold, and I think that looks overall pretty good. But again, if we enter into a global recession, I do actually think that the euro dollar potentially could come down further. So I do have a position here. I'd be willing to add in some bigger picture longs if we do get them, at least at the time of recording this. I like the setup for euro longs. One chart that also has me very perplexed right now is the US 10-year Treasury bonds. And I want to take a look at that because, again, these are moving with a lot of momentum here. Take a look at TLT. We can take a look at the daily chart. I know this is a little bit ugly, but let's apply a trend filter. You can see we've moved with a lot of momentum to the upside. If this gives me a pullback, I'm probably going to buy back into my TLT long idea. We're seeing a little bit of a bounce back due to this headline. You can see Trump says that Vietnam wants to cut their tariffs down to zero if they're able to make an agreement with the United States. Of course, this is a little bit too early and kind of a rumor here, but if there is some progress, like I said, with like Vietnam and places of the sort, it could be a domino effect where you actually see countries start to step up and join in on the negotiations for fear of being left behind, if you will. If multiple countries start to come forward and say, look, we'll negotiate, it could start a train reaction where you have many countries wanting to negotiate with the U.S. Hey, let's avoid a global recession. Let's make a deal. At the end of the day, Trump's perceived perception, he is the deal maker, right? So countries wanting to make a deal could be actually a positive development for this whole situation. But like I said, further escalations, which is something we'll have to watch for over the weekend and next week, are something else to think about. At the end of the day, we're going into this Friday close, probably a lot of people closing out of positions, simply not wanting to hold the risk over the weekend. But there is that possibility that any sort of phone call that goes well between Trump and other major country leaders could very sharply reverse this market. Volatility is very high. I do want to encourage people to be very careful on both sides of this market if you're bullish or you're bearish. If you're bearish, what you may not be aware of is these types of moves, if they get a bounce, they can be rip your face off rallies. Like you could have very sharp rallies, just like you're having very sharp sell-offs. So high volatility environment, be very careful out there for sure. And for traders outside of the United States looking for a better brokerage, check out Vantage. Vantage Markets allows traders to trade pretty much everything under a single brokerage, and they're offering a really generous welcome bonus to my subscribers right now. Vantage allows you to trade pretty much everything on multiple different trading platforms. They integrate with TradingView, there's MetaTrader, all sorts of things. And of course, with them, that welcome bonus is a nice extra welcome bonus. It's in the name. So if you're interested in checking out Vantage to see if they're right for you, do your due diligence by clicking the link in the description down below. That specific link will get you set up with that additional welcome bonus. And the chaos doesn't seem to be ending for now. Today on the Market Insights podcast, I spoke with Johnny Hart a little bit about this. Check this out.
It's been a crazy week, really, hasn't it? For the obvious reasons, but it seems to be getting even crazier. The US stock market today has lost, I know the Nasdaq's lost about 4% last time I looked. This hours after China announced it's going to enforce retaliatory 34% tariffs on US imports from April the 10th. The Nasdaq's been battered, but so have stocks right across the United States, right across the world. Is there an end to this? Where are we going?
Yeah, Johnny, it's a crazy week, as you mentioned. Just every angle of this tariff thing, headlines are covering and obsessing over every single move. This morning, as you mentioned, China put into a place retaliatory tariffs, and in response, Trump tweeted, or I guess on his Truth Social, he made a post just saying that he thinks that they made the wrong move. And yeah, it's scary out there. I mean, we have not seen, I was saying this just before we hit record on the podcast, we've not seen the price action that we're seeing in markets to be this volatile since the August of last year carry trade unwind fears. But that was very short-lived. But before that, really go back to 2020, the COVID pandemic outbreak. It was this huge shock to the system, and that's a word or a phrase you've been using on the podcast here quite a bit, right? Shock to the system. This certainly is a shock to the system, because there's just this massive uncertainty about, okay, well, clearly China took the opportunity to respond basically aggressively, right? There was, and of course, of the list of tariffed places or places that were dealing with this new kind of announcement, China was going to be the one, of course, to be kind of the more aggressive respondent. These two countries, China, US, they're pretty much rivals. But then now the question becomes, again, how are the other countries? Are they going to follow suit with China? You know, we've heard rumors about Japan, South Korea, these other places maybe banding together with China, which is a very concerning concept because, of course, these are U.S. allies. And so if we start to see U.S. allies join in on the, pushback, things could get really uncertain really quick. And I mean, they already are, but the only certainty in this market right now seems to be the lack of certainty. Right now, we are waiting constantly for the next headline. As you mentioned, you've got some crazy down moves across the board. You've got down 4% for the S&P 500, 4.3% for the NASDAQ. The Dow Jones is down 3.4%. The Russell's down almost 6% today. The German DAX at one point was down 5%. The Nikkei down 4%. These are crazy moves. You have 37% up move on the VIX today. And the dollar, we've got to talk about the dollar bouncing back on this and potentially shifting into its long-term role as a safe haven in terms of a recession. We've seen the dollar getting crushed here recently, but if the new paradigm to think about, Johnny, is a global recession, the SMILE concept, which I encourage listeners to look up if you haven't, about the US dollar, the SMILE concept is basically saying when you get serious all-out global recession, the dollar again regains its crown as kind of the global reserve backup currency. So maybe we're seeing a little bit of a sharp bounce back in the dollar, up 0.6%. But again, that's a modest bounce in comparison to the recent sell-off, the recent carnage in the currency world. We do see the euro and the pound really sinking here today against that US dollar strength that is coming in. We see yields down massively. Again, Johnny, I don't know if we've talked about this since then, but I looked at the expected interest rate changes. The bond market's now pricing in 4 rate cuts this year. So we've got serious yield Armageddon, if you will. At least that's what it looks like. And you ask, where does this end? I think the market's freaking out so much because that's so unclear, right? We had hopes we could have held out yesterday, today, that the response from these, from China, et cetera, would be like, well, let's discuss this, or, negotiation call set up between President Xi and President Trump. But instead, we got, again, response tariffs basically matching and potentially escalating the situation. So, yeah, the answer of where does this end is very difficult to call. And I think that's where you're seeing investors just say, okay, enough's enough. Sell now, ask questions later.
I hope that video was helpful to you. And I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel. So don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.